Hello, I'm Lois Carrier, Certified Financial Planner, and President of CMW Wealth Advisors with your weekly snippet. Last week, we separated the U.S. from the foreign asset classes. We had two tracks, two races, which we're going to do again today. Last week, in the lead in the U.S. was U.S. healthcare and technology. They were nose to nose out in front with large growth not quite a full length behind them. This week, large growth pulled up nose to nose with technology. Wait a minute, what about healthcare? Well, we saw a burst of speed, putting it in a substantial lead this week over the other two, with a year-to-date return of 10.8%. So the picture's changed just a little bit, with healthcare pulling away from large growth in technology. And then breaking from the pack, from the back, and closing the gap with the leaders is large value, posting a 6.25% year-to-date return. Next in the lineup on that racetrack is mid-growth, and on its tail running well is small growth. Now let's take a look at the foreign track. Last week's leader, if you remember, was emerging markets, with large foreign and growth and value right behind it. Well, emerging markets is still leading foreign stocks with a year-to-date return of just under 10%. Now, last week, foreign real estate and U.S. real estate, they were the laggers. And guess what? They still are. They're laggers. But at least they're chasing the pack. They continue to be in the race. They're posting small returns. Now, the big news this week is commodities. You remember this one. I told you that this one is the one that not only stayed off the track, but was in the barn for several years in a row. So the first three weeks of this year, they sputtered out of the gate. They didn't know what they were doing on the track or which way they were supposed to run. But finally sprinted onto the track with a gain of 2.6%, bringing them into a respectable position at 3.1% year to date. Historically, when they do decide to run, they really know how to do it big time. So we're going to just see what they do this year. Now, the laggers on both tracks, way back in the dust, is high yield and foreign bonds, bringing up the rear of the pack. At least they're on the track. The rest of the bond benchmarks are in the barn and they're sleeping, and probably will be for quite some time. And that is this week's weekly snippet, and I thank you for tuning in.